Good afternoon, ladies and gentlemen. Welcome to Business Today, to our very special show, Market Guru, where you get to meet the finest brains that there are on the Lal Street. People who have navigated the ups and downs of markets. They have created immense wealth. And in that connection, we are now joined today with Mr. Naveen Kulkarni. He is the Chief Investment Officer at the PMS business of Axis Securities. Namaste, Naveen ji. A very warm welcome to you on our Market Gurus episode. And I am presuming that the last 17 years that you've spent in the markets working with various brokerages such as Reliance Securities and Phillip Capital have resulted in this wisdom that you now have and is visible in white hair.
Yeah, thank you. I do not know about the wisdom, but of course, I spend a lot of time in the equity markets, which markets you need to keep learning. You can never be the wisest in the market.
Absolutely. With that lovely phrase that you can never be the wisest in the market, let's discuss the way forward. Just a brief note on Mr. Kulkarni. Overall, the Axis Securities portfolio management scheme business has about 3,300 crores invested on behalf of ultra HNIs and wealthy individuals. Mr. Kulkarni runs two major schemes: Axis Contra PMS, which has about 2,000 crore rupees, and Axis Growth PMS, which has about 1,000 crore rupees. So the bulk of the money rests in these two schemes, which, ladies and gentlemen, are doing phenomenally well. So Naveenji, let's start this lovely conversation on a good note. We've seen a fantastic rally all of May. The markets have been very kind from 1st of December onwards. We have a major event this Saturday, and on 4th of June, the result of the national elections will be out. How are you positioned in both schemes? What is the level of cash that is there in the portfolio, and how is it different from 15 days ago?
So let me just briefly tell you about how we were thinking of these elections and how we were positioned. So I think that to start off with, we started with a broad view that elections are going to be constructive from the market perspective. So election verdict is not going to have a significant impact on the portfolios. That is the start that we had. Initial rounds, let's say the phase one, phase two, at least we saw some degree of challenges than what we started off. I think we started off being were very cognizant. So we did raise some bit of cash in our portfolios. We did have 8 to 9% cash in our strategies. Like Contra at one point in time did have 10% cash in the portfolio. But over the course of time, what we have also seen is that at close to around 22,000 odd levels for the Nifty, especially during, let's say, closer to phase four, we saw there was more jitteriness that it was expected. So we did deploy more of cash, right? So at this point in time, I would say that we are fully deployed.
Okay.
Whatever cash that we have in our portfolios is for day-to-day portfolio management purposes, like we want to sell something, there is T plus one, T plus zero settlement, so on and so forth, right? Which is to manage the portfolio. But otherwise, what I would say is that we are fully deployed. Only thing that we tend to focus on more is from a perspective of liquidity of the portfolio. Uh, our component of large cap and mid cap has component of small cap, of course, to some extent has decreased. Our focus is to be in stocks which are more liquid in nature, where we will be able to exit those stocks at any given point in time without having a significant impact on the market, right? And that's the broad idea with which we are working at this point in time. So two broad aspects that we have been focused on is improving the quality quotient in the portfolio and improving the liquidity of the portfolio. So these are the two key themes which are of key focus.
Okay. Uh, Naveen, if I am not mistaken, each portfolio in Contra and Growth PMS is limited to 10 stocks each.
No, see the number of stocks varies. We would have probably shared the top 10 holdings. The number of
Okay.
stocks is not very high, is in the range of around 21, 22. It can go up to 25, but Yeah, bulk of the stocks, the top 10 stocks will be comprising close to more than 50% of the portfolio.
Okay,
Any of
okay. Fine. So bulk is 50%, and overall it's a holding of about 21, 22. From the names that are there on the screen, as far as Contra is concerned, obviously the top performer over the last couple of weeks has been Indus. Your bet there has paid off handsomely, and there is a smattering of PSU names like Power Grid, Hindustan Petroleum. There is a private bank which is ICICI, and of course you have Nifty's fabulous outperformer Mahindra and Mahindra there as well. Naveen, just to drill this a bit further, what is the thought in your mind when you buy a stock for the Contra portfolio? From what I look at it, these are, at some point of time, out of favor companies like HPCL was about a year ago, and then suddenly something changes, and there you have it. You have two defining stocks from the hotel and leisure space, Thomas Cook and Indian Hotels. So, what is the thought process in your mind when you pick up a Contra stock?
So when we are looking at Contra as a strategy, it's based on three broad pillars. One is, of course, core is value investing, which is very, very critical for us. Second is, of course, we are looking at turnaround stories, right? Wherever there is something which is going to happen and the stock can re-rate significantly, right? So, and the third, of course, can be special situations. Right? These are the three broad pillars on which the Contra strategy is based upon. I'll just give you an example. Let's say how something fits in. Let's say the way we looked at Indus Towers, right? So we looked at Indus Towers at one point in time where there was serious amount of disbelief that the company can create value for its shareholders, right? So because of tenancy challenges, so on and so forth. But what we did realize in this industry is that there are two factors. One is how the tenancy is going to improve for Indus Towers, and how the company can create value, right? If you look at Indus Towers as a bet for us, it's kind of an utility company, right? Compared to a lot of other businesses which tend to be in spaces where it's difficult to create long-term value. But Indus Towers is in a space which is kind of utility, but also it's not regulated, right? So a utility business in most cases tends to be regulated, right? The ROEs, so on and so forth. There are so many aspects to it. But Indus Towers as a business is an utility business with no cap on it. So the amount of ROE that a company like Indus Towers can generate is disproportionate. The amount of dividend payout that it can do is disproportionate, right? So from that perspective, Indus Towers was always a very, very attractive bet, which attracts a wide range of investors. Only challenge was, let's say, the solvency of a company like Vodafone India. I thought
Yes.
that we believe that there is a chance of that playing out, and they were able to successfully raise funds through doing through a QIP route, right? So from that perspective, it's through an FPA route. So from that perspective, Indus Towers has played out significantly well.
Yes.
Similarly, our other bets are also have been the case, right? Whether we look at HPCL or recently we bought Vedanta, right? So we bought Vedanta around 270 odd levels. Again, there was a good amount of disbelief in the company. There is
Yes.
cycle was not well at all. Now everybody is talking about the aluminium cycle being very, very strong. We're looking at EBITDA doubling in the next 2 to 3 years kind of time frame. Execution wise, the company is very, very strong. Dividend payout history has become amazing over the last 3 years. So Vedanta was another bet that we took. So the point is this, that it's again focuses on value investing as a core theme. And of course, if that is backed by some kind of a turnaround theme or some kind of trigger, is what attracts us big time, and we take a significantly large portion in these kind of themes, which turn out to be solid returns for us. Like Vedanta has
Absolutely.
probably delivered 70-80% return. Indus has delivered 70-80% of return.
So essentially, if I get this right, you buy into disbelief and you sell into momentum as far as pure Contra is concerned.
Yeah, so the cell decision is again based on how the structure changes. tend to book profits time and again whenever we see that the structural story has played out, or whatever theme that which we bought has played out. But largely, we tend to ride on our winners for longer. We don't want to exit our winners. We want to cash out, or we want to preserve our capital in our losers. Right? That's the broad theme with which we work, and that has worked for us very, very well over the last
Okay.
years. We have launched these strategies.
Let me ask a contra question in Indus Stars. What you see at the moment, ladies and gentlemen, is a phenomenal performance as far as the stock is concerned. It's been one of the best performers over the last 2 odd months, and let me just see. We still are further away from its all-time high, which is somewhere like 454 rupees. We last saw somewhere in August of 2015. Naveen, is the steam still left in Indus Towers, given that the underlying financial strength of its main client, Vodafone, seems to be improving?
Yeah, so if you ask me this question, I will say this, that let's say the stock was at around 450 odd levels back in 2014-15 kind of a time frame, right? From that, of course, we have seen correction, we have seen challenges in the industry, and of course the stock corrected. But what I can say is this, that this is of course a long term bet for us. That's point number one. Point number two, if let's say the tenancy problem which is solved and it's getting solved, and there is, if growth which we see that is coming back, because their capex intensity has increased significantly over the last couple of quarters. So this is a company which can attract a very wide range of buyers, right?
Investors,
See,
yes.
important for any kind of stock is eventually demand supply, right? Whether the demand is going to outstrip the supply. For smaller companies, the demand will always be a challenge, right? Whether a smaller company will attract a set of investors, will attract a foreign institutional investor, or will attract pension funds globally, right? That's going to be a challenge for smaller companies. But a company like Indus Towers, which throws up so much of cash, which gives up so much of dividend, and if it can deliver on growth, right, the number of kind of investors that the company will attract is going to be phenomenal, right? We did see that there were a lot of private equity funds, there were pension funds, right? They were investors in a company like Indus Towers. We
Yes.
see them coming back at some point in time. All these factors will mean that this company can be re-rated multiple times from current levels. So I would be surprised if things go work well. This stock doubles from the current levels over the next 2 to 3 year kind of a time frame, which again is going to be a phenomenal return from a market perspective, even from current levels, right? So that's the view that we tend to have on Indus Towers. It's a great company,
Okay.
absolutely.
Let's now focus on a different part of the portfolio. We've discussed your topic for a while. Anything, Naveen, in this roaring bull market that you've purchased for Axis Pure Contra in the last 2 months?
So again, we keep buying something or the other every now and then, right? So again, as I said, the last 2 months we added Vedanta in our portfolio, right, which has done very, very well. Last two
You've
months we
added.
added Vedanta in the portfolio, which has done phenomenally well in our portfolio, right? So again, as I was talking about metals pack doing well, and that's been a good performer for us, right? And we still see value there, right? Because aluminum is still very, very strong, which is the major component. Then of course there can be other things which can play out. EBITDA growing very, very strong. Guidance is company very, very strong. Cash flows are going to be pretty strong, right? So that's another pick that we continue to like in the portfolio, even at current levels.
Okay. And how about, let's pay a little attention to growth as well, because that's where the entire focus is on the Lal Street. Okay, so Contra's done very well. Growth, you have about 1,000 crores deployed in your PMS. We'll have the portfolio right there in front of you. Uh, Naveen, in this kind of a roaring bull market, is it easy to find growth stocks which are decently valued?
Yeah, so to be very honest, this is a kind of market where the growth stock of the last decade have come off their peak valuations, right? So if I were to look at the last decade, what did well were the consumer name, right?
Yes.
They have come off their peak valuations quite a bit. There are still companies which are doing well, but most of the companies, let's say a Asian Paints or a Hindustan Lever, even a Dabur or a Marico, whatever you can think of, they have come off their peak valuations significantly. So from that perspective, of course, there are interesting themes to be looked at. Uh, in our own strategy, like growth, of course, our largest bet is Bharti Airtel, primarily because of the tariff hikes which the sector needs over the next couple of years and the kind of EBITDA growth that the company is capable of delivering. Right, and of course, there are other names like Indian hotels where the average room realizations are very, very strong. It's also growing in this space in terms of adding more rooms. Then, of course, we have Geo Financial Services, which is going to be very, very disruptive with the use of AI platforms and things like that, right? Use of enhanced data in terms of building more customer profiles, building better lending profiles, many things that they are going to do, right? So that's the idea. So there are of course interesting names that one can think of when we look at growth as a strategy. There are options which are always available, and one has to dig a little deeper to figure out what can do well in the next a decade or so.
So, so you're super bullish on telecom because the two top picks in growth and the top pick in the Contra fund is from this particular space. Fair enough, and it's delivered very well. Of course, we'll take a look at how the other stocks are performing in the growth portfolio. Naveen, one stock that catches my attention is Gillette India. Well, you and I are clean shaven almost, so obviously we are using the Gillette product. But a vast majority of the Indian men sport beards, and I would imagine that Gillette would be very well placed in the Contra portfolio, but you have it in pure growth. What's the logic there?
Yes, sir. Think of it like this, right? So when we bought Gillette, of course, the stock was at a much lower level in terms of. So Gillette is a long-term growth stock, to be very honest, because of the kind of products that it does. And also, Gillette was a company which was getting into different kinds of spaces. Like they have globally, they have acquired Brown, which is into different types of, let's say, hair dryer, so on and so forth. Right, common appliances which are used for grooming. So the larger point for a company like a Gillette is that like you said that you and me we are clean shaven, but the youth does sport a lot of beard, right? So interesting point here is that if you look at this demographic profile that India has, good part about India is that people do grow beard, right? So that's the point, right? So there is that if I were to go to some of the Southeast Asian countries and other countries, naturally the amount of shaving that people tend to do is of course lesser. So India is a very key focus area for a country for a company like Gillette, right, which is very high quality in nature. So from that perspective, there is a cycle which always comes at some point in time. Fashion tends to come in, go out, so on and so forth. That's point number one. So whenever there is a turn of cycle, launch of new products that will have, and then of course they are entering into new spaces which will mean that the growth can improve from the current levels over the next 2 to 3 years, right? So overall, it's in a space where men's grooming, it's in upcoming space. There are of course new products getting launched, new categories being entered.
Right, sir.
It was a great growth stock.
Okay, so we've discussed a lot as far as individual stock holdings are concerned, and Naveen has been very forthcoming in discussing his strategy and the trajectory ahead for these individual stocks. Naveen, now gaze into your crystal ball and tell our viewers what happens if the present government continues post June 4th. Where do you see the markets by December 2024, in particular the Nifty, and where would you be deploying fresh money? Large caps, mid caps, or small caps?
So this is where I've been talking about for a while now. Uh, our December 2020 for Nifty target is 25,000. Uh, uh, from so maybe adding another, let's say, 2,000 points from the current levels, next around 8 to 9% return from current levels in the next around 7 to 8 months for the Nifty is what we believe can happen. But more importantly, one has to think about how uh, this will materialize, right? So there are, if I were to look at the market, I feel that the small cap space is kind of overvalued than what it was probably a year and a half back. So from that perspective, there are areas which are a little frothy. A challenge of the small cap space is always going to be liquidity, right? So that's a space where liquidity challenges could be there, and the correction at times can be sharper than what we would have liked. So from that perspective, our focus is of course going to be the large cap space for this year. I hinted on this topic when we started discussion also, because we want to improve the quality quotient of the portfolio and we want to improve the liquidity of the portfolio. When I'm saying I want to improve liquidity of the portfolio, of course we would be more focused on large caps because they have a much more ease in terms of entry and exit also, right? So exit strategy is very critical for us. So focus will be large caps. They are better valued also, more reasonably valued also. And of course, compared to last year, this year can be better for large caps compared to this.
So fair point. Within the large cap space, obviously there is value to be had if you compare them to the phenomenal rally that's happened on the mid cap and the small cap indices. Would you have a sectoral or a stock preference in the Nifty 50?
So we will not restrict to Nifty 50, but let's say we look at the broader space. See, there are two, three areas. One is, of course, banks as a segment that, which we look at. We feel that there is greater value which can be generated in that space because most of the banks are right now are doing delivering a double-digit ROE, which is phenomenal for a banking industry, right? So if I were to look at Axis Bank, ICICI Bank, they are delivering more than 15% ROE, even in SBI delivers ROE in that range, right? So from that perspective, banks are of course interesting. Challenge for the banks have been with regards to deposit growth. I feel that in the next, I would say 12 months, deposit growth is likely to improve. So from that perspective, definitely banks are attractive from current levels, and more importantly, banks are extremely liquid. They offer
Yes.
great value. They are very liquid. They are fairly large in terms of market capitalization, right, which is another added advantage. Very likely we see that the deposit growth is going to improve, and probably if we start seeing a cycle of interest rate cuts, which means rate growth will also sustain, right? So banks over the next 12 months perspective look reasonably attractive to me, and it's a good space to be in. It's undervalued compared to a lot of other spaces. You look at price to book multiples in banking, of course, are quite reasonable. And of course, if things can improve, it can be a great bet to look at.
Right. Naveen, how can the credit deposit ratio improve in banks when people like you are having a target of 25,000 on the Nifty over the next 6 months, and all the money that used to go into the fixed deposit is coming into PMS schemes such as yours. So, who will deposit the money in, ICICI, Axis, HDFC Bank, and of course Kotak? I take your point; they're undervalued, but this is just an aside. Full par and full marks to the entire PMS segment that has created a fresh investment avenue for ultra HNIs, and I'm sure they are doing extremely well. Naveen, I looked across your portfolios, both of them. I didn't find a defense stock, and I did not find a huge amount of PSU names except for one or two, which is Power Grid and HPCL. Is this a rally that you have missed consciously, or is this something that you regret has not represented itself in the top five picks on both portfolios?
Yeah, so as far as PSUs are concerned, if I were to look at the Contra strategy where we invest in PSUs, we have a significant number of PSUs. We have Power Grid, we have Bank of Baroda in the portfolio. We have HBCL in the portfolio. Some names you may not have seen would be names like REC, SBI Life, right? So there is a decent allocation of PSU. So we have not missed the PSU rally at all. Yeah, but to be very, very honest, we have missed the defense rally. We did buy into defense rally quite early, but we sold also quite early because we believe that there are going to be execution challenges when we started seeing the war challenges and equipment not coming from Russia, right? So that is when we exited. So we exited a little early the PSU rally. We did have a good amount of holding in stocks like Bharat Dynamics and all, but we have not managed to rise that rally fully. But we don't regret the PSU rally. We have more or less captured the PSU rally fully. We had a huge allocation to SBI in our portfolio from 200 levels to close to 800 levels. So we had a phenomenal, I would say that success with the PSUs. But yeah, defense, I do have some degree of regrets where we cashed out a little early, or probably we chickened out a little early.
नहीं नहीं ऐसा नहीं है आई मीन it's okay, you know, you've made supernormal money. You can't win them all, and of course, markets, it's a zero sum game. I'm sure you will get an opportunity to get back into defense. By the way, since you exited and now, have the how should I say, have the dynamics of the defense sector changed for the better, or have prices run up so sharply that changed dynamics still are not attractive enough at current levels?
Yeah, so to be very honest, it's at times you miss and then you wait for a better opportunity, right? So let's say that you sell a stock at 500. At times you might feel that buying the same stock again at 1500 is can be a little challenging optically. So you probably wait for a better entry point, and that entry point somehow never comes. So those things do happen with us. And having said that, we don't see that the dynamics. The dynamics for these sector have the defense sector have improved significantly, right? There is absolutely no doubt about that, right? Let's look at a company like Hindustan Aeronautics Limited, right? So the company is doing phenomenally well, right? So the numbers that the company is reporting and the order book that they have, for the products that they have, right? So all those things are phenomenal, and I feel that even this company has legs from here also, right? So maybe a 25-30% return in the next 1 year is very much possible. So broadly, is what I would say is this, that defense, of course, is a very very interesting sector. The world that we are living in uh, is of course changing. The world order has changed. All these things do mean a lot of things for defense sector. Sometimes you tend to wait a little longer and miss the rally, but to be very very honest, I still feel there is upside in many of these stocks. Uh, Difficult to take a view on valuations, but surely it's still a very very exciting sector.
Fair point. I'm sure when we meet shortly, sometime later, there might be a few defense stocks when it comes to both Axis growth and Axis Contra. Naveen, we are drawing to a close. Anything that bothers you? Where do you see froth in the market? Where are these lovely hair tinged with wisdom get whiter still when you look at valuations, when you look at stock performances, and you say, hey Ram, ye bazaar mein kya ho raha hai?
Yeah, so sometimes, when I were to think of the market, right, I tend to worry about things like the small caps are doing well, the mid caps are doing well, the large caps are doing well, and even gold is doing well, right? Uh, so how is that working out, right? So every other asset class is doing well, metals are doing well, right? So there probably doesn't seem to be anything which is not doing well, right? So is that something which is common phenomena? It's not, right? So that's the thing which tends to worry me. I'm not too bothered about valuations, to be very honest, at this point in time. Reason being, we are in a very, very strong balance sheet cycle. we are in an extremely strong balance sheet cycle. That means valuations will be range, right? Unless and until we enter into a bad balance sheet cycle, that's when valuations crash. But at this point in time, balance sheet cycle is extremely strong, is where. But of course, we tend to worry about the global macro risks, which can be challenging, and of course, areas like which inflation, which can suddenly come out of nowhere and can have a huge impact on the portfolio. Right? So those are areas that we tend to worry about. But other than that, I think we are quite fairly well placed to deliver double-digit return on a year-on-year basis.
Right. Naveen, it's been a pleasure. And what an interesting talk on telecom. I've covered the sector for 15 years, so what you say resonates deeply into me. And we hope the very best for both the two schemes that you run, Access Contra and Access PO Growth. We are looking forward to the Nifty being at 25,000 by December 2024, and that you get back into the defense space on a very profitable note. Thank you so much for your time, and here's
Thank you,
wishing you
Mr.
the
Tech.
best.
Thank you.
That, ladies and gentlemen, was Mr. Naveen Kulkarni. He's the Chief Investment Officer at the PMS business of Axis Securities, manages about 3,300 crores, runs two very well-known PMS schemes, and is very fond of telecom. That was Market Gurus for you today. Do stay tuned to Business Today for all your financial news needs. And here's hoping you have a great investing day as well as a very nice portfolio in the years and decades ahead. Thank you so much for watching.